Why is the US dollar falling to record lows in 2025? Discover the factors driving this unprecedented decline and its potential impact on the global economy. Stay tuned to uncover the intricate dynamics at play. In 2025, the US dollar has experienced its worst performance in decades, tracing back to the economic strategies employed by President Donald Trump. The dollar index, which compares the US dollar against a basket of other major currencies, fell 10.8% in the first half of the year. This decline is primarily attributed to President Trump's unpredictable economic policies, which have led to a significant sell-off of dollar assets by global investors. A key factor in this turmoil was the introduction of sweeping tariffs on April 2nd, aimed at imports from various countries. This move, intended to boost domestic industry, instead caused a loss of confidence in the U.S. economy, leading to significant sell-offs in financial markets, especially in U.S. Treasuries and equities. As a reaction to this financial upheaval, the decision was made to temporarily pause most of these tariffs, except those impacting China, yet investor caution persists. Economic growth projections for the U.S. have been adjusted downwards, with the OECD lowering its forecast from 2.2% to 1.6% for the year. The pivotal legislation under debate, referred to as Trump's One Big Beautiful Bill Act, is another major concern driving the dollar's decline. This bill aims to extend tax cuts while simultaneously reducing healthcare and welfare spending, proposing increased borrowing to support these measures. If passed, the Congressional Budget Office estimates a $3.3 trillion increase in federal debt by 2034, pushing debt to unsustainable levels and increasing the annual deficit. These fiscal uncertainties have led Moody's to downgrade the U.S. government's credit rating, further impacting investor confidence in the dollar as a safe investment. Moreover, the expected interest rate cuts from the Federal Reserve under pressure from the Trump administration are seen by many as a means to stimulate the economy, but are contributing to the weakened perception of the dollar. The implications of the dollar's weakening stretch beyond U.S. borders. Traditionally, the dollar is the anchor currency for global trade and finance, with a significant percentage of international transactions conducted in dollars. Despite this, other currencies, such as the euro, have gained strength due to the dollar's depreciation. The euro itself has appreciated by 13% against the dollar, reflecting a shift in investor sentiment towards non-U.S. assets. The depreciation of the dollar has benefited developing countries by reducing the local cost of dollar-denominated debts. Furthermore, it has the potential to boost global commodity prices, advantageous for nations that are major exporters of resources like oil and agricultural products. The weaker dollar has also shifted investment focus towards European equities, which have seen significant gains this year, providing positive returns for investors diversifying away from U.S. markets. In summary, the fall of the U.S. dollar in 2025 is linked to a combination of unpredictable economic policies and investor concerns over the sustainability of U.S. debt. President Trump's tariff wars and tax reforms have led to a massive sell-off in U.S. financial assets, weakening the dollar's position as a global safe haven. The consequences extend beyond the U.S., affecting global financial markets and the economies of developing countries. With further policy changes anticipated, the dollar's role on the world stage remains uncertain. What do you think about the current state of the U.S. dollar? Do you believe President Trump's policies will have a long-term impact on its global status? Share your thoughts in the comments below and join the discussion. Don't forget to like, subscribe, and hit the notification bell to stay updated with our latest economic analyses and insights.